Hi guys, this is 14 November 4th, 2022, 9:24 p.m. Friday night. And yes, instead of partying, drinking, I stay home and decide to make a video because that's who I am because I don't party, I don't anything. Anyways, let's talk about the market. I'm going to talk a little bit about the news. Not really the news. I wouldn't call it a FOMC. I wouldn't consider it news. It will be more of like a market such thing you can think of as FOMC. The only thing you gotta pay attention to, it's like when you play a video game and how when the official games company is giving out like a patch, right? You gotta pay attention to that. But don't pay attention to news. Do pay attention to FOMC every 2 months. And this is very important because I think this FOMC reflects how, in what scenario will the market rise. Many people in the market right now believes, at least on my Discord or YouTube, believes that the bull market will not start unless the Fed will starts bringing down inflation all the way to 2%, or start but basically until inflation rate gets controlled, the bull market will not start. And I don't believe that to be the case. The reason I don't believe it, because let's take a look at the chart real quick. Not this one. This is a result of a bear market, Fungo Pop. Let's take a look at SPY and let's take a look at the 50. Let's take a look at the 15-minute chart. Okay, the FOMC. Where was it? It's this day right here. This day. Please pay attention here. Okay, this is very important. When the FOMC gets released at 2 p.m. On Wednesday, before the interviewers start interviewing Jay Powell, before they start asking questions about him, they first released that they're gonna raise the rate by 75 basis point, and then there are basically they're hinting that there will be potential change in how they will, right here on the key point on CNBC. I can show you guys up right here. The second one right here, the central bank news statement hinted at a potential change how it will approach the monetary policies to bring down inflation. So that's the central bank's news statement that was first initially released at 2 p.m. alongside with the 75 basis point. So these were first released, and the market's reaction was actually positive. It goes to show that the market actually doesn't really care too much about the 75% basis point, but they want to hear the Fed saying that they want to be having a quantitative easing. They want to start easing the interest rate, and that will drive the market up. And I was like, wow, that's crazy, because I was like, this is it. Like, if they decide to start quantitative easing, start relaxing with their tightening on controlling this inflation, the market will rally. Meaning that if in any way, shape, or form the FOMC next time or the next time they have any more hints, even especially if they start lowering the tightening of the interest rate, let's say instead of increasing it by 75 basis point, they increase it by 50 basis point, that is potential trigger for a brand new bull market. You don't need the inflation rate at 2%. That's all it takes, because what happens later with the market after it failed is when during the interview, one of the interviewers asked, so are you going to be, are you looking to start, easing the tightening up in order to control the inflation? And Jerome Powell was like, well, no, that's not what they're going to do. They're going to do all they can do to try to control inflation rate, which means they're pretty hawkish. They don't want to have any type of pausing, any type of easing until they actually see the numbers start coming down. So no matter what, they're going to go hard with this market. And that is what caused this drop down right here. Meaning that, yes, the market will start rallying a little bit of good news. But if the Fed doesn't change, after the Fed announced that they have a hard stance on controlling inflation, the market plummet. Meaning that, going back to what I was saying, next time, if we hear a tiny bit of quantitative easing, the market should go back to a bull market. Now, I say should, meaning never mind, not should. In my opinion, it probably will. Okay? That's my take on the Federal Reserve right now. and how the market is going on. And right as of right now, it's we're probably gonna go lower at this point. The trend is lower. We got rejected. IWM at the 20-day move at the 200-day moving average. The QQQ got rejected at the 50-day, and S&P got rejected at the 50-day moving average, and the Dow Jones same thing. So there's no reason to be bullish right now, and we gotta wait till hopefully November, December, probably late November into December. And there is somebody asked me a question when the CPI today was released. The U.S. payroll surged by 261,000 October. So the hiring remains strong. So the hiring and the job that's coming out is strong, but unemployment rate actually went up. Means that there are more people getting unemployed than jobs are being created at this point. And I think that's a good news. And right now, this might sound a little weird, but right now I believe that bad news is actually good news. Bad news is an indicator for the Fed to take a look at. If the Fed sees that the Americans are not getting jobs or they're getting laid off, unemployment rate is going up, they might consider start quantitative easing. They might start going easy on with their monetary policy. And if good news keeps on coming out, let's say unemployment rate is going down, nobody's getting fired, more jobs are being created, everybody's have a job, then that will give more room for the Fed to continue to start their quantitative tightening, right? And that is a bad news for the market. You can say market is cold-blooded. Yeah, market doesn't care about if people have jobs or not. Market will, they discount a lot of stuff, right? Good bull market, represents a good economy, but stock market is a leading indicator for the economy. Thus, if a good economy wants to come, there's a cycle everybody read in textbooks, right? That cycle is real, right? And we're in the cycle where the stock market right now is going through a bad cycle. Economy will soon follow the stock market, and then we're waiting for the stock market to start going up. Then at that point, when the stock market starts going up, the economy will still be bad, but it should soon follow. That's my take. So, conclude today's video. Quick conclusion. If we start seeing Fed start easing their monetary policy, for example, start raising rates by only 50 basis point, that will very likely just ignite the brand new bull market. And I don't think that's happening until late November or early December, right? But who knows, right? But and then I think right now bad news is good news, and good news is bad news, because good news will give more room for the Fed to continue their quantitative tightening, and bad news will tell them that, hey, you want to watch out, start calm down a little bit, right? And as of right now, yes, I will stay cash, and there isn't a lot of ideas right now. You can see in this market, you don't want to just buy stocks. This is what happens, right? Funko Pop dropped 50%. SRTS, boom, 51%. And then what other stocks are there? CCRN, which is one of my my favorite one, literally plummeted today, 11% today. It's actually on huge volume too. So I obviously got kicked out of this one. And the only thing that looks good is energy stock, and energy stock I suck at trading it. I get kicked all the time. Maybe I suck at swing trading them, but it is what it is. Like, I get in, I get kicked, and they march forward. I suck at it, so most likely I'll be staying short or staying cash. Thank you guys for watching, and that's the video for this week. Please like and subscribe. Follow me on Twitter at check the description and everything. See you guys next time.